Assalamualaikum. Hai Fika, Mira, Anissa.
Hi.
Hi.
As we know, our upcoming final exam international banking is around the corner, but I am not clear the chapter of Offshore Financial Center. Can we have discussion together?
Yes, sure, Aziz. Let's meet tomorrow at library on 9 a.m. How about Mira and Nisa?
Surely can. Let's go.
And they developed ashore income and eventually established themselves.
What are offshore financial center? Offshore financial center can be defined as any financial center where the offshore activity take place. Sometimes it's called as international financial center. Such center, there may be a slight difference between onshore and offshore business, by which a loan to a non-resident may be found in the center or market, and the supplier of fund can be resident or non-resident. A more practical definition of an offshore financial center is a center where the bulk of financial sector activity is offshore on both sides of the balance sheet. Next, offshore financial center offers significant tax and regulatory advantages as well as providing clients from other countries with international banking services. The financial services given by offshore financial center differ from those offered by onshore banks in that they are primarily for non-resident clients. However, not all the services offered. So, offshore financial center play a role in the financial system and international banking. It improved the availability of credit and encouraged competition in domestic banking and financial system. Also, it helped to boost the investment in major economy, which in turn support job creation, reduce inflation and economic growth.
Okay, understand.
Thus, offshore financial center function as jurisdiction provider, also as an entity to manage financial system with external asset and liability out of proportion to domestic financial intermediation designed to finance domestic market. It is also an international center which provides some or all services such as zero taxation. Offshore financial center need to maintain extensive legislation and to take measures to reduce criminally related activity. Lastly, offshore financial center must maintain an important structure for providing the various services required by a global clientele. Amira, can you help us to explain about the types of offshore financial center?
Yes, sure, Bika. Okay, the type of institution under offshore financial centers, OFCS, can be defined as much as smaller center and provide more limited specialist services. As noted, OFCS can define here still range from centers that provide specialist and scale activity, attractive to major banking and financial institutions, and more likely regulated centers that provide services that are almost entirely tax dividend and have very limited resources to support financial intermediation. While many of the banking and financial institutions registered in such OFCS have little or no physical presence, that is by no means the case for all institutions.
Amira, may I know how many types of institutions there is under offshore financial centers?
There are 4 types of offshore financial centers, which are: the first is International Investment Bank. Deposit may not be subject to reserve requirements. Furthermore, bank transaction may be tax exempt or treated under a favorable fiscal regime, and it may be free of interest and exchange control. Second is offshore bank. It may be subject to a lesser form of regulatory scrutiny, and information disclosure requirements may not be rigorously applied. Okay, the third is Offshore Corporation of International Business Corporation, IBCS. IBCS are limited liability vehicle registered in NOFC. They may be used to own and operate businesses. They also can be used to create complex financial structures. Moreover, IBCS may be set up with one director only. In some cases, residents of the OFC host country may act as nominee directors to conceal the identity of the true company directors. And lastly is insurance companies. A commercial corporation establishes a captive insurance company in an OFC to manage risks and minimize taxes. In addition, an offshore insurance company establishes a subsidiary in an OFC to reinsure certain risks underwritten by parent and reduce overall reserve and capital requirement. An offshore also reinsurance company incorporates a subsidiary in an OFC to reinsure catastrophic risks. The attraction of an OFC in these circumstances include favorable income, or withholding, or capital stack regime, and low or weakly enforced actuarial reserve requirement and capital standard.
Hey guys, may I interrupt? I think I want to explain about facilities offered by Offshore Financial Center.
Okay, sure, Azzy.
There are 4 facilities offered by Offshore Financial Center, which is Offshore Savings Account, Offshore Current Account, Offshore Investment, and the last one is Forex Services. Okay, firstly is Offshore Saving Account. Most people thought that it requires millions to open a saving account at offshore banking. However, based on the Offshore Financial Center around the world, it is a common misconception. Some offshore saving account accept opening deposit of as little as USD1 and should be denominated in foreign currency. Typically, however, someone may have invested a minimum of US dollar 5,000 or US dollar 10,000 to open an offshore saving account. The charge for operating offshore saving account may be high. For making a withdrawal, for example, the fee can be as high as US dollar 25. So, depositing in a small balance in an offshore saving account may not make financial sense. The second one is offshore current account. This account is varied with the one offered under the onshore current account. In addition, depositors can use debit card to withdraw money in either dollar, euro, and sterling currencies for free, again helping to save on charges. The ease of movement between accounts also means whoever can protect their money against currency fluctuations. Next is offshore investment. Basically, the types of service offered including structured notes and structured deposit. The attraction of offshore financial center investment services including no capital tax, no capital gain tax, no corporation tax, and others. Besides, making regular payments in a foreign currency, for example, paying monthly school fees in a different currency. Other than that, making a foreign currency payment at a specific time in the future. Next is managing the client's overall foreign currency exposure. Then, forward contracts and spot transaction. Last but not least, managing the currency risk, for example, like liquidity and fluctuations.
There are a few reasons why someone associates the OFC. Firstly, is for legitimate purposes. They have a great privacy for personal, family business, or even for political reasons. Some jurisdictions, for example, Switzerland, place great emphasis on maintaining client confidentiality at all the times. Other than that, it is one of the methods that make it easier for everyone to separate funds from daily use in case of emergencies such as bankruptcy, accidental, divorce, and so on. Not only that, OFC may engage in negative matters or illegal purposes where the issue involves money laundering. In general, money laundering syndicates as a process of concealing the origins of money obtained illegally, such as internet fraud, which usually occurs on transactions involving buying and selling, investing, and so on. This fraud is actually hidden through various layers of records, documentation, and illegal conversion of proceeds through new mediums such as offshore financial services. There are 3 levels of money laundering committed by criminals to evade detection by the authorities. Firstly, placement. Criminals will deposit cash into small accounts to be deposited into bank accounts or exchanged in the form of traveler's check or postal money to several banks as well as different locations. Secondly, quoting, where the criminals will withdraw their savings repeatedly through various different banks in different countries using fake companies with no asset or operations to keep the money away from its original source. Lastly, illegal money is absorbed into the legitimate financial and economic system. It also makes illicit money seem to be obtained legally. At this stage, it is difficult to distinguish between legal and illegal wealth proceeds. So that's why the public at this point should be aware that money laundering syndicates do not only happen among those with title, as it can happen to anyone if not curbed from now on.